Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Stocks slide Wednesday under pressure by a recent decline in tech. Investors also eyeing a mixed batch of retail earnings and the Federal Reserve's latest meeting minutes release at the end of the session. The S&P 500, the NASDAQ ended the day lower. The Dow eking out, closing there in the green. We're unpacking big box earnings and predictions as retailers in a reporting wave. We're giving you what you need to know to navigate the latest results. And luxury car consumers driving some automakers into deep concern. We're taking a look under the hood about what tariffs have meant for those stylish rides with a hefty price tag. Well, retail in focus as earnings from the major big box retailers are rolling in. Here to break down the trends in the sector, we have RJ Hottovy, head of analytical research at Placer AI. RJ, always great to see you. Let's start on Target. That was a big story in today's trade, RJ. The stock gets hit. It finishes down here more than 6% in today's trade. They named a new CEO. What did you make of the news, RJ? What did you make of the stock reaction?
Yeah, I think the reaction's clearly looking for a bit more in terms of management. I think a lot of people are looking for an outsider potentially to come in and help with some of the well-publicized issues that the company's gone through. I think that was probably what lagged on the stock. Also looking at the trends there, obviously we're still looking at negative traffic for the company. Clearly still a shift towards more basic needs than discretionary purchases, leading to questions about merchandising. So I think that's probably what's dragging on the stock. That being said, I think there still is a solid foundation to build off of here with Target. It is going to take time. It is going to be interesting to see what the new CEO is bringing to the table. I don't think there's going to be a major disruption, but I think that the market does need to see a little bit more concrete in terms of some of the turnaround plans for the company here. But that's definitely what pressured the stock today.
What do you think that Target CEO, the new Target CEO, RJ, I mean, as you try to think through what his priorities should be, you know, in your opinion, what levers should he be pulling? What should he be prioritizing? Is it RJ, is it innovation? Is it tech investment? What would be your game plan?
I think out of the gates, probably back to basics. I think what we're looking at right here in visitation data, in terms of visit frequency, seems to suggest that people are going in less frequently like right now. And I think the basics in terms of just making sure the stores are stocked well, in terms of the merchandising mix, I think the simple blocking and tackling here is really the most important thing that the company needs to address. I think certainly there's room for innovation. I think there's certainly room for some of these other things. But right out of the gates, I mean, I think it's just really getting back to that experience and being able to kind of shift and consumers get them coming back in. It really is not a matter of the total number of visitors here. It's just visit frequency has really come down as people start to shop other competitors, other channels. And I think just the back to basics approach really would be the first step here.
RJ, let's broaden this out because we heard from Target, but also TJX and Home Depot, RJ. I'm just curious, big picture, you've read through those earnings reports, you listened to the calls. So far, RJ, what have you learned about the consumer? What have you learned about the sector?
Yeah, I think the big takeaway today is that consumers are cautious, but they are willing to spend. I think if we look at kind of the data last month or so, that people did spend around Prime Day and the other events here, probably some more of it online than in store. But at the same time, too, they are spending on more need than want. We heard this pretty consistently from Home Depot and Lowe's, who said it's kind of the basic maintenance projects, the little projects that are really driving visits right now, as opposed to the big ticket projects. TJX, across the board, really more essentials than discretionary spend, but also very much focused on this value. I think we have a consumer that is very price sensitive after the last couple of years of inflation. They are nervous about potential tariffs and the price increases that may come from that. They are going to look to get a deal, and that is where they can get that with TJX. And I think that's kind of the story here, is that it's a very price sensitive consumer, but one that is still willing to shop and spend if they feel like they're getting the value out of it here too. So I think that's the takeaway, at least from the first couple of days here of earnings.
And if you have that cautious consumer, RJ, as you put it, more focused on what they need rather than what they want, are there retailers, RJ, certain kinds of retailers that you think, okay, in that environment, against that backdrop, they're better positioned?
Yeah, I think the off-price channel, no surprise there. I think that, certainly we saw it with TJX. I think we're going to see it with Burlington. I think potentially see it some of the other players in the space. I think it's well positioned. I think dollar stores could be an interesting play here. The issues that the dollar stores ran into in 2024 well publicized. Some pricing issues, some merchandising issues. They've had a pretty strong year, and our data seems to suggest that's continuing so far in 25. The other sector is the club sector, looking at Costco, BJ's. And Sam's Club, those have all been exceptionally strong too, and it's really starting to take share from other channels as well. So I think that could be another one. Obviously, there's been a lot of momentum in these names. There's a lot of people behind them, but at the same time, I think even with that, there's still a lot of potential. For potential for upside here with those names as well.
What do we think, RJ, based on the earnings reports we have now, a bit more data, what do we think the outlook could be for the retailers in the second half of the year?
Yeah, it's a great question. And I think looking at the back half of the year, a lot of the companies already baked in pretty conservative guidance at the beginning of the year. When a lot of the guidance was set, it was when we were starting to see signs of that economic uncertainty. So a lot of the retailers set the bar low. And so as a result, we're not seeing a ton of change right now in terms of guidance. And I think we're still squarely in this wait and see mode with a very dynamic consumer environment that seems to change its behavior kind of day by day, hour by hour, even in a lot of cases. And so I think right now the next step is really what is the impact of some of the tariff related price increases. It's very early days. A lot of the retailers will be a little bit more discreet in terms of how those price increases are going to affect. I think we're going to start to see more and more information as we go through August with that. If some of those price increases are starting to push back, or consumers are starting to push back on those price increases, from there we'll get a better signal for the back half of the year. But I think it's reasonable to kind of have that same mindset going in the back half of the year. A very cautious consumer, one that's willing to spend, but probably more deal seeking than it is kind of full price. And I think that's going to be the name of the game in the back half of the year. Very promotional, very deal-seeking consumer as we got into holiday and into 2026.
Fine, I'll get you out here on this, RJ. Walmart on deck tomorrow. What do you expect to hear, RJ? What are you going to be listing for?
Yeah, I think they're going to be one of the share gainers from the category here. I think the price rollbacks have been successful. Looking at our visitation data, that has been driving a lot of consumers. They had a very successful July holiday event, more than a lot of the other retailers. So I think that's going to be a benefit for them. I think it's one that it should be a nice, solid bellwether here for this earnings season. And again, playing in a lot of things we've discussed, this value orientation, but one where consumers are buying for need more than want. And I think that's the perfect story for Walmart here. So I think it's setting up well, and they probably have a better than most when it looks looking at results here.
All right, we will all be watching closely. RJ, always good to see you. Thank you.
Thanks, Josh. Appreciate it.
Stick around. Much more Ask for a Trend still to come. Well, the Dow closing higher as the S&P 500 and the NASDAQ slide for a second day. Tech stocks slipping again amid rate cut uncertainty. For more on the trading day takeaways, we've got Yahoo Finance's Jared Blickery. Jared.
Thank you, Josh. You said it. 2 days, tech sell-off, and is it going to be a third? I hope not, but let's take a look at the price action that we've seen over the last 2 days. Nothing too concerning. And in fact, one thing that's kind of positive here, and we're looking at the NASDAQ composite, closed the day down about 0.2%. We saw a nice bounce right down here. And you're seeing a very similar thing in the NASDAQ 100. NASDAQ 100 happens to be very close to the 50-day moving average, a key technical level. I'll just kind of draw it in there. But when you see a nice reaction off of that, it means that there's buying support and that the traders are buying the dip. So that's the good news there. Now, if you look inside, and we've seen mega caps really get slammed the last few days, this is a 2-day look at the NASDAQ 100. You can see Broadcom off 5%, Amazon and NVIDIA down 3%. Let me show you the price action in NVIDIA. This is just what happened today. You can see there's that really nice bounce that we got off of the lows, and I think that was close to one of its big moving averages too. Don't quote me there. And I'll show you Alphabet too. Alphabet also had a nice little bounce down there. Now you compare that to Apple. Let's take a look at that. Well, that's not as healthy. It kind of came down and then it bled lower actually into the end of the day. That's a pretty negative close right there. Very similar story for Microsoft. And so this is kind of one way that you can judge buying interest in winners and losers. And this is just very short-term stuff. Maybe Microsoft and Apple find support tomorrow morning if there's another downdraft. But I'm just saying this is how a lot of traders would view the market right now.
What would you say, Jared Blickery, the theme of the last 2 days has been?
as I said on the Brady Bunch, rotation, rotation, rotation. And I'm going to show you the sector action. I think this is pretty telling here because yesterday and today we had more green sectors than we did red. And this is a 2-day look. So you take a look at who the losers are here. These are all the mega cap sectors. Tech, well, we know tech, that's Apple and Nvidia. Discretionary, that is Amazon and Tesla. Communication services or telecommunications is Meta and Alphabet, plus a bunch of other stuff. But basically, those were the 3 drags, the big guys. Then you look at top there, real estate. Well, we saw interest rates tumble yesterday, and that kind of gave real estate a boost. Staples, healthcare, utilities, energy, that's a bit defensive. So that's kind of a yellow caution flag right there. But you're seeing a lot of green, so nothing to worry about too strongly yet. Also want to mention, I had the chance to sit down with Steve Sosnick today of Interactive Brokers, and we talked about this price action and the nature of rotation.
Well, I mean, I think, when I look at how the market reacted this morning, I think, the market was sort of treading water to a certain extent, slightly lower in the pre-markets, and then 832, you can track it to that. And when the president put out his Truth Social post about asking for Lisa Cook's resignation or demanding Lisa Cook's resignation, I think before that the market was content to sort of let the process work out. Because I'm not going to opine whether I have no idea if she did or didn't do what she's alleged to have done.
But we can game that out too. We're going to talk about the Fed after the break and all that good stuff.
We can game that out, but the point being, I think the market was, okay, you know what, there may be some politics involved in the investigation, there may not, let's let the thing play out. But as soon as you have the specter of presidential interference in the Fed, that gets people spooked, particularly foreigners, and so it's no coincidence that we sank very quickly after that. We've since recovered a fair amount of it. Jared, I know you're a technician. It was NDX, SPX was right off that 2 standard deviation Bollinger Band, which has proved to be a very, very tight rate. It's really contained the markets to a large extent. Even in April, it contained the market, except the band was incredibly wide. So that was sort of the more rational dip buying today, and then we went back to rotation, having had a little bit of a risk-off moment this morning.
So he was talking about Bollinger Bands in there and some other stuff, but basically we found support today is the bottom line.
All right, and so we talk rotation. What about rotation in crypto? Anything noteworthy?
Yes, and yesterday was kind of ugly in crypto, and I was talking about the relationship with strategy and also Bitcoin, and let's get the crypto heat map up today, but this is a 2-day look. Let me just show you what's happened today, and you can see some dark green here, and then the 2-day look is also green, so that's pretty positive. And I'll show you the chart in Bitcoin. Bitcoin can be considered a higher beta or higher volatility play on the underlying risk markets. And here was what really threw a lot of traders for a loop, and that's one of those breaks to the upside that just sucked everybody in and then got slammed to the downside. But guess what? We found some nice support here. I'll give you the 2-day view, and you can see, didn't get that big reaction that we saw off of Nvidia or the NASDAQ 100, but it's right there at support. And here's Ethereum, and here we saw a much greater reaction, and a little attempted downdraft there just got met with some really strong buying. So I'm seeing interest in crypto here, and so that's a very positive sign, not only for crypto, but risk markets.
I'll leave it there. Thank you, buddy.
All right.
Stick around. Much more Ashford Trend still to come. Well, Wall Street's hottest trend this summer isn't about flashy IPOs. It's about staying private longer. And in private markets, a record amount of big funds and their customers are struggling to exit positions, but they're finding a new way out. Here with more, we got Yahoo Finance's David Hollerith. David, walk us through what's going on here.
So Josh, they're called continuation funds. And effectively, if you take the traditional private equity model, it's taking funds in from investors and then purchasing companies or stakes in companies and then trying to make the companies better and then eventually realizing or exiting the position to return money to investors. That's the traditional model. What we're seeing more often now, at least in a record capacity this year, is the use of these funds where they're sort of, the managers are not actually selling these assets in these sponsored companies. Instead, they're holding on to them and starting a new fund, so it's effectively a rollover mechanism. And so we've seen that volume occur at a record pace in the first half of this year, and that generally means, according to Jefferies, that we'll see the rest of the year look even bigger.
And you point out, David, in your piece, the use of these funds reaching records, right? How come?
Yeah, I mean, I think it goes back to what you said in the intro, which is that there's been a slower pace of deal exits for these companies, and that means either trying to sell them like an M&A merger or also doing an IPO. And we have seen the M&A market and the IPO market sort of improve, rebound this year. But the truth is that there's a lot of private equity companies with sponsor companies that are effectively, that they binged on buying during, like right around after the pandemic, and now they're sort of struggling to exit those positions. And one reason is people talk about companies wanting to stay private for longer and not go public. The other is that maybe these companies were overvalued when they were initially bought. So a lot of people have different opinions about it, but it's a debate. And as we move through the year, it'll be interesting to see if we see more sales in this area or more use of continuation funds.
In your piece, Dave, you also mentioned some stock performance this year. Names like KKR, our parent Apollo. What is going on there exactly? Yeah,
it's not exactly clear, but the one clear thing is that in the second quarter, overall sales or exits were down about 10%. And so fear of maybe sales continuing to slow is sort of what's driving that, because once these firms, at least in their private equity divisions, once they can't exit their positions, they can't raise new money as quickly to basically do it all over again. So their engine slows. And I think that's the concern, is that there's more headwinds. Interesting. All right, big important story. Thank you, David. Appreciate it. Meanwhile, tariffs are the latest speed bump for automakers, and it may be causing the consumer to switch gears when it comes to luxury brands. Joining us now is Yahoo Finance senior art reporter Pras Subramanian. Pras.
Yes, so reporting from your former backyard, California,
yes.
Right, Josh? Tariffs and luxury uncertainty, sort of the name of the game that what we're hearing at Monterey this past week. Let's start with tariffs. Bentley telling me that they had to pause cars earlier, but now they're importing UK with a 10% deal that's signed, so that's helping them there, bringing those deliveries back. But for others like the EU and Japan, they start at 15%. Those deals aren't official yet, right? So they're having some issues with Infiniti at the premium end. It's a bit different story, and Lamborghini at the upper high end, a different story too. Let's hear from these top executives about what they had to say about the tariff situation.
So for example, QX50, we had to pause the production into the US. But in Canada, there's a lot of opportunities, so we shipped more vehicles there. We also increased production of QX60 that is built here in the US.
The worst thing is uncertainty. We are for free trade. Today we have still the 27.5% of tariffs, which is not good for the business in general, but not all. And so we have a share between the customers and us. We take the bigger part, and we hope that soon we will come at least to the 15%.
Yeah, so Lambo hopeful there about that 15% tariff rate, and they said that it was unfair that they didn't want their customers to pay the full amount, so they absorbed most of it and passed on a little bit in the form of smaller price hikes, right? So I want to turn now to the luxury consumer. Again, a mixed bag here. So, and the Jaguar's MD, their top executive, told me, his name is Rowden Glover, he told me that, quote, luxury is not impervious to all these macroeconomic things that are going on, like geopolitics, but it's pretty robust, right? And then Bentley CEO, which you would think that at the higher end things would be better, not exactly true. Mike Rocco, their U.S. CEO, said there's hesitancy in luxury automotive, but you're also seeing that translate to real estate and other luxury goods. Meaning that you go try to may want to get a watch and get any deal you want right now with Swiss watches, right? Even though the tariffs are kind of getting higher there. So again, different cases here. Infiniti again, that premium, not super high-end luxury, a different story. Lamborghini, of course, at the ultra luxury high-end. Here are those two execs again talking about the luxury consumer.
As far as the consumers are concerned, we see the market still moving in the right direction. Leading indicators, everything from website traffic to visits to dealers are increasing. So positive year ahead of us.
The first half of the year was almost in line with the first half of 2024. And the next 6 months is difficult to make a forecast because there's a lot going on in terms of geopolitical changes.
Yeah, so sticking with Italy and a company that sort of operates on both of those ends, the premium and ultra luxuries, Maserati. Their new CEO told me that from the premium luxury buyer, think crossover SUVs. They're still going to make that purchase. You're still going to lease that car because it's not going to be that much of a difference in price. But for like a $300,000 sports car at $30,000, $40,000 in tariffs, that buyer might say, I don't want to pay that, at least not right now.
I am surprised that if I'm I'm a hot shot in Miami, I'm on the hunt for a new lime green Lambo. I am surprised that rates or geopolitics would be on my radar at all, Pras, to be honest.
Yeah, I think that's sort of the conventionalism, right? It's like, hey, they have money to burn. What's the big deal? Why would they hesitate? And it seems like there's something in the car world where there's the sort of we'll do it next week. So you have a big purchase on tap, and you think to yourself, we're seeing stuff happening in Russia and Ukraine and even in the Middle East, and you're seeing this still the high tariffs. You still hesitancy, AI balloon potentially popping, and I think give it to me till next week. It's kind of like what the Maserati CEO said. You might want a Maserati, but you don't need one. And if you don't need one, you might push that back. And this is the CEO saying that. Yeah. So I think you're right, John. I think there's certain buyers who are like, I'm buying that Rolls Royce. Like, I want it, I deserve it, I'm going to get it.
Honestly, what does need have to do with it? I mean, it's just pure want. Come on, Pras. Thank you.
If you want it bad enough, you're going to get it, right?
That's good. All right, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all the latest market move stories affecting your wallet. Have a great night.